The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and we're going to help you with your taxes today. So get your calls ready to come in, 803-0930, 803-0930, star 930 on a cell phone. And of course, you can get those fingers going and you can text us at 716-803-0930. We're in the full swing of tax season. Most of you should have gotten all of your information, even from your brokers, even though some of them have further extensions. But we want to help you, and I'm joined in studio, of course, here with Chris Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher. So my subject today is about all the tax-free income, but I also wanted to let everybody know that BOI is back. Now, what does that mean, Chris? It's not a good thing, is it?
No, that's the thing everybody's tired of us hearing us talk about.
People say to me, I know it's something about a big fine, but I don't understand why it, So let's talk about BOI. If you're a small business owner, limited liability company, partnership, subchapter S corporation, you must comply with this federal order, or the fine can be up to $10,000. And we don't want that to happen to you. So give everybody the information.
Yeah, so now you have up until March 21st. So
that's
27
days from now.
20 days from today. So think of the first day of spring. And hopefully that will be here by then. But you have till March 21st to get it done. And like you said, it could be up to a $10,000 penalty, which is astronomical. I mean, not many of us have $10,000 just
all right,
laying
let's
around.
talk about why they want people to file with the Financial Crimes Network.
Yep.
That should be a clue. Financial Crimes Network.
Right now, all the, like you said, the partnerships, the corporations, LLCs, they're all registered with the states on the state level. Now the government says, well, wait, we want your information.
By jinkies, we want to know who the owners are.
Right. So you have to now, the same thing you gave the state, whatever state you registered in, you have to give to the federal government. So, and they say it's to help for money trafficking, money laundering, sex trafficking, drugs, anything criminally related. It's a lot easier for them to look at people.
But it's mostly financial crimes, because I'm sure if there's sex trafficking, they're making money off of the sex rings, right?
Yeah.
So, but here's the thing. So you have basically 27 days in order to register with the Financial Crimes Network. You go to BOI FinCEN, and it is a fairly simple form to fill out. If you need help, EG Tax, we do them for $50, right?
Yeah.
And you can give EG Tax a call, and we will do your FinCEN. Or you can go to the Financial Crimes Network, BOI FinCEN, and you can register yourself. But please, you don't want to have to fight a penalty.
Right.
It's not fun fighting a penalty,
Just
because they got so much more power than you. So make sure you get that
and
done.
It doesn't, if you're doing it yourself, it doesn't cost you anything.
And you don't have to do it year after year after year.
It's a
It's one time or until the owner
switches.
Right. So, so BOI FinCEN, Financial Crimes Network, it's back in full swing. But the interesting thing is, for the importance of this, you never hear anything.
No.
I mean, do you really ever hear anybody? Somebody on TV should be going, you better get registered because you don't want a $10,000 fine. Okay, I'm Esther Gullius, the tax lady from EG Tax. All of our offices are open 9 to 9 Monday through Friday, 9 to 5 on Saturday. Our McKinley Mall office is the only one that's open on Sunday. Our Naples office on Airport Pulling is open every day as well, except for Sunday. So if you need the best tax help for the most reasonable fees, EG Tax is there, and we guarantee our work. We stand behind what we do,
Exactly.
and we help you.
And we're there. We're live in
Right.
person.
And we'll answer questions live and in person, right? Okay, we have Debbie. Hey, Debbie, how can we help you?
If you can help me with a life estate, I'd appreciate it.
Sure.
My mom, who lived in New York State, passed away last year, and she had a life estate. And I'm her daughter, and I'm a non-resident of New York State. And my sister is also a heir, and she's a resident of New York State. So I received IT 2663, the non-resident estimated tax for the property.
Yep.
Am I liable for New York State tax? I'm a non-resident.
All right, but here's the wonderful thing, and I was just on the Financial Guys show just before this. A life estate is wonderful because assuming that she had it for at least 5 years and it's been all fully deeded over to you guys and you inherited it, you're going to get a stepped up basis, which means that if it was worth $200,000 when she died, you get it for a $200,000 basis. Obviously you sold it, so there's going to be no gain. So no, you're not going to be subject to any tax.
But you just
Okay,
fill
and
that form out.
Right.
You
And
gotta
then do
fill
I
that
still-
form.
Go ahead.
Go ahead. Yes, you still have to fill out the form to say,
And then do I
here's
have
the
to
cost
send in a
basis.
non-resident, New York?
Well, no, that is the form that you would use
yeah,
when
that,
you are
that's
a
for the
non-resident.
withholding.
Right.
Right, but then do you
Right.
have to do an IT 203 for the year of the sale? Well, if there's a 1099-S,
Right.
then yes, you're going to have
Right.
to
In other
prove-
words, if they give you a 1099-S form for the sale of mom's former house, then you're going to put it. This is a federal thing, okay? So then you'd put it on the Schedule D. You're going to have the stepped up basis, and you won't have to pay any taxes, and you won't pay anything to New York State either.
But
Okay,
yes,
thank you
would
very
do-
much.
Okay,
Oh,
Deb.
go ahead.
All right.
Okay,
You're
bye.
good, Deb.
Thank you for
Okay,
calling.
thanks.
I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. And for those of you down in Florida, you lucky dogs, you can go to our website at egtax.com, ask the tax lady, and we'll answer your questions next week. Wanted to talk about people have such a confusion as to how they're taxed. So people think that if you move into the next tax bracket, that everything is taxable that you earned all the way through. So if you made $100,000 and you're in the 22% tax bracket, it would mean how much in taxes?
$22,000.
But that's not true. What happens is you move through brackets. So the first layer is 10%. And until your taxable income gets to 23.2, you pay 10%. Then what happens when your income's more than that? Then the next layer of bracket, which goes from 23.2 to 94,300, this is all married joint, would be the next level. The next level is 12% at 23.2, and then 94.3 at 22%. Then the next level over that goes to $201,050 for married couples. So the first bracket's 10%. Then the next bracket is 2% more. Then the next bracket is 10% more. Then the next bracket's 2% more. So it's like, what would you say it was like? It's like building just a foundation, right?
Yeah, it's a graduating scale.
So you never pay the flat 22% on all your income. It's graduated,
Correct.
right? So I thought that was important for people to know. Hey, I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break. We'll be back on the other side with your comments and questions. Hey, I'm Esther Gullius, the tax lady from EG Tax. We have all of our 31 area offices open to serve you, including our Naples, Florida office on Airport Pulling Road, and we have an Arizona office. So somehow we got into 2 warm areas. Buffalo.
We're trying to bring the heat to Buffalo.
Right, that's right. I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We have a couple texts before we get into the other stuff here.
We do. Well, besides someone texting in saying you should drink honey and vinegar.
That sounds really bad. I mean, that would make a cold. You want to get rid of the cold just so you wouldn't have to drink that stuff.
Yeah. But we got, hi, I'm writing to ask a question about BOI. I have 6 LLCs. Do I have to fill out 6 BOI forms online, or is it just one form and the umbrella for all? No, you have to do
6.
all 6.
Right.
Every one you have that has a separate EIN number has to have a separate BOI done.
And here's the thing, if you really read the law, you find out that the introductory fine is the $500 and some odd dollars a day till it gets to $10,000. But they have other bigger fines and jail terms that if they think that you're is kind of in kind of a state of rebellion, and in your rebellion you're not going to do it, they have like $100,000 fine and jail time. So, it's not difficult to do. And you want to go to the Financial Crimes Network of the federal government, BOI FinCEN, you only have 27 days. And for those of you that have done it already and then they suspended it while it went through court, you're fine. Right?
Yeah.
Okay. 8030930, 8030930, star 930 on a cell phone. Okay, I want to talk about some tax-free income. Some scholarships are tax-free, but some of them are taxable, right, Chris?
Right. As long as the scholarships are being used for education, they're tax-free. If they're being for room and board, or you're getting the money back, say tuition's $10,000 and you got $14,000 in scholarships, and you get a check back from the school for $4,000, that's taxable as well.
So if you are receiving scholarship income and you're in a degree program, as long as that scholarship is paying for your education and books and fees, then it's cool. It's tax-free. But if they're giving you more money than the actual cost of your tuition, like Chris says, maybe an extra $4,000, that becomes taxable on whose return?
On the child's
on
return.
the kid's return, because they're the one that got the money. And a lot of times people say to me, "Oh my gosh, I want to. Can I claim my child that's in college?" Yes, and the kid in college can make how much before they even start to pay taxes on the federal?
On the federal, it's
like $15,000.
$14,000.
Right. So it's a lot of money. On the state of New York, it's anything over
$3,100.
$3,100. So scholarships for that pay for room and board, that's fully taxable. And what parents don't understand is that's passive income, right?
Right.
And could be a kiddie tax.
Exactly. And we had one of those just yesterday, a kiddie tax. And trying to explain that to the parent as well as the kid.
Well, let's linger on that, and we'll take some phone calls. 8030930, 8030930. What is a kiddie tax? Is it a meow meow kitty? That's not what the kitty.
No.
It's KIDDIE.
Yep. And so that's any child under the age of 24 if they're a full-time student, under age 19 if they're not a full-time student, and you're claiming them. Any unearned income, or such as interest, dividends, excess scholarships, unemployment, will get taxed at the parent's rate.
Right. So if you notice what he said, scholarship. So if you have excess scholarship, that goes on the child's return, or if, well, actually, it goes on the child's return, the excess, but it has to be taxed at the parent's rate.
Yep.
So, all right, let's go to the phones. We're going to go to Darren. Hey, Darren, how can we help you?
Hi. Hello, Esther.
Hey.
I'm a small business owner, DBA, and you're scaring me with this, what you opened the show with.
Well, I'm going to tell you something. Are you a limited liability DBA?
No, just DBA.
Then you're good, Darren.
I got nothing to worry about. I mean, it goes on, all this stuff goes on my Social Security.
Okay, but
And
all right, so you have to understand it's people that have registered with the state that made them an entity that is protected legally from lawsuits, etc. But in your situation, because you're not a limited liability company, if I want to sue you, I can sue you directly because you don't have that protection. You're not somebody that has to do the BOI
well,
FinCEN.
I'm registered with the county, and
No,
I carry
you're good.
$2 million
You don't have to worry.
insurance.
You don't have to worry. You're good.
Okay, nothing to worry about. You're scaring me here.
No,
Or
don't
you
be
were.
scared. Don't be scared. You're fine.
Okay, thank you very much,
All right,
Esther.
thanks for calling. I'm Esther Gullius, the tax lady from EG Tax. I don't mean to scare people, but I don't want them to get a bill for that kind of money.
Right.
And remember, limited liability companies, 1120Ss and partnerships. That's what we're talking about, right?
Yep.
And actually, there's a list of exceptions. For instance, if you're a not-for-profit, you don't have to do the BOI FinCEN.
Correct.
So, and if you're a bank, you don't have to. I'm pretty sure that M&T Bank is not saying, "Oh my gosh, we have to file." No, they don't have to file. So, anyway, let's go to Darren. Hey, Darren, how can we help you?
David. Yeah, Darren. David from California.
Oh, David from California. Hey, Dave.
Yeah, afternoon, Esther. Yeah, I was interested in the kind of penny wise, pound foolish logic of people avoiding paying taxes. As I see it, we the people own this country, and we need to fix our stuff, whether it's a library roof or whether it's fixing the potholes in the road. Paying taxes is fixing our stuff, and the longer we neglect our stuff, the more expensive it can be.
You're absolutely right. I mean, the income tax situation was designed to make sure that the federal government could utilize it for the good of the people. Nobody wants there to be something bad that would happen to the federal government. I think what happens sometimes is absolute power corrupts absolutely. And so I think that with Trump, I think he's trying to reel it back in from maybe some abuses and some real out-and-out thievery, in my opinion. So I appreciate your call. Thanks for calling, Dave. Have a great day in California.
Well,
There's
the
palm
penny
trees in
wise-
California, too, isn't there?
What was that, Dave? Or is he gone? He's gone.
Is she
Oh, no,
still there?
he's there. Yep, we're still here, Dave.
Oh, yeah. Well, the penny wise and pound foolish aspect of firing government employees. I mean, just the idea of firing the Weather Service, we could end up with all sorts of people who don't have a concept of whether or not the weather is going to be reported in the future. much
Dave,
less
you know
he's
what? I
fired-
think that we're not going to opine on this subject. I thank you for calling and have a great day from California. All right, I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Yeah, Chris.
I'm going to spin off of his first part about people not wanting to pay taxes. I know I had this week a client, and the mom was complaining that she only makes $1,000 in Social Security, and that's her only income. And he goes, I'm so tired of hearing her say this. And she was a hairdresser her whole life. And so guess what? She never claimed her tips, never claimed all her income. So that's why her Social Security is so small. She didn't have to pay $300 extra or $1,000 extra a year, but if she did, she may have been getting an extra $1,000 a month now in Social Security.
It's true. I mean, I know where Dave's coming from, and I really think that everybody needs to calm down and watch as this thing moves forward, because from looking at the personality of our president, he seems to use kind of a buckshot way of dealing with things. Boom, and then he reels it in. So I'm sure that he doesn't want to get rid of the weather service or get rid of people that are doing a good job. I certainly don't want to see that happen, but I can't fix what's going on in the federal government except to hope that he's going to do a better job at reining it in.
Yep.
Okay. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone.
We'll do a fast text
Yeah.
before the news.
Yep.
My student loan was discharged. I did not get any tax info about it. Do I need to claim this anywhere for New York State?
Okay.
No. Both the federal and New York State have student loan forgiveness as tax-free right now.
That's right. So that's a hallelujah. All right, now we got another one here.
Quick question on win-loss statements from our local casino. I have W2Gs totaling around 30,000. My win-loss statement says a plus 200. No losses. Really confused because I don't have all that money. What is my actual loss, and what can I claim as a loss?
All right,
Thank you.
here's the thing with gambling. All of your winnings are taxable on page 1 of the 1040, okay? All of your losses are deductible if you can itemize on the Schedule A. So you're going to find out that if you have, and maybe you would check with the casino, but if you have jackpots, you have to include it, and you're limited to your losses up to your winnings.
Right, and for this person here, what that letter, your win-loss statement is saying is you only, for that whole year of 2024, only came out $200 ahead. So your losses
Or $29,800.
There you go.
Yep.
So that's what you get to
I'm
claim.
Esther Gullius, the tax lady. We're going to take a short break for the news. We'll be back on the other side. From EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We're talking taxes. I got Chris Fabian here with me. All right, some scholarships are tax-free. Some Social Security is tax-free, right?
Yep.
And one of the things that Donald Trump is proposing is that all Social Security is going to be tax-free, but I think that there's going to be an income cap on there. There always is. I'd be very surprised if he made all Social Security tax-free.
Right, because that's the $25,000 and $32,000 floor has been there since
Forever.
Reagan put it into
Right.
taxes.
That's really that should be modified for sure.
Yes.
So when is Social Security taxable?
Well, when you take all your income plus half of your Social Security, and if you're single, that figure comes over $25,000, then your Social Security starts to be taxable. If you're married joint and that figure is over $32,000, then it starts to be taxable.
Right. And here's the thing, just like that last text that we had about gambling, if you're somebody that went to the casino like that person and lost $29,800, you still have to report the $30,000 in winners that you have as part of your base for determining whether you have to pay tax on your Social Security. So you really get shot in the foot.
Yep.
So some Social Security's tax-free. Welfare benefits, fully tax-free.
Yes.
Federal and state. VA benefits, fully tax-free, federal and state. Here's another one. Sale of your personal residence. A lot of times people will say to me, I'm going to sell my house and I'm going to make a killing, because in the Buffalo area, the houses went absolutely berserk, right? So if you had a house that you paid $45,000 for and you sell it for $250 and you've been living there for the last 15 years, how much of it you got to pay in taxes, Chris? Zero. And you don't have to reinvest the gain. It's just the first $250,000 of gain is tax-free if you're single. The first $500,000 of gain is tax-free if you're married filing a joint return, provided you lived there 2 of the last 5 years.
Yes.
Which is a really important planning thing, because if you've moved out of the house, maybe you moved to Florida and you still have the house up here and you're in Florida, and that was your primary residence up here, and now the clock is ticking because you're down in Florida. You have to make sure out of a 5-year period, if that was your personal residence, you have to have lived in it for 2 years.
Correct.
Okay? I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. Reimbursements of business expenses.
Right. So you're on
You're an outside salesman,
Yep.
and you turn in your receipts, and they give you a reimbursement.
right. So that means you're on an accountable plan.
And so that's tax-free.
Correct.
But what if the boss says, really, Chris, you're just a pain in the neck having to report all these expenses every week. I don't want to deal with your expense report. We're going to give you a flat $300 a week. That's taxable.
That's taxable.
Because that's a non-accountable plan.
Exactly.
So if you're somebody that's getting reimbursed, you want to make sure that they put you on an accountable plan.
Right.
So
right.
that it's not going to be taxable.
Yes. Yeah. Because one is an expense for the company, and so they get to write it off, and you get to not claim it as
Right.
income.
Absolutely.
So it's,
How about personal injury?
personal injury paid out due to injury is tax-free.
Right. So when you see all these things, I got $17 million. Well, if that was for pain and suffering and for physical injury, that's tax-free.
Right. Right.
So I thought that was interesting. Insurance reimbursements for medical expenses.
Right.
So if you hadn't claimed your medical expenses, that's tax-free. The value of your health insurance paid by your employer. Many of you, if you just take a look in box 12, I think it's box 12, double D, you see how much your health insurance is. Your employer that's a gigantic benefit.
Yes.
And it's tax-free.
Yeah. So I mean and that's what people don't realize, how much, and with the price of insurance right now, you can't that's a huge benefit for
an employee.
For an employee.
Right.
'Cause
And the employers are paying big dollars.
yes.
I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on his cell phone. Text us at 716-8030930. Let's go to Ed in Hamburg. Hi, Ed.
Hello, Lester. Nice to hear from you. Hear your show. It's very entertaining and informative.
Oh, thank you.
All right. I got a question regarding New York State taxability of interest income on U.S. government bonds. I know for federal taxes, that all that interest is taxable. Now, for New York State, I don't think it's taxable, right, for U.S. Treasury bills and notes, right?
That's correct. Any federal obligation where that's paying you interest is going to be completely tax-free on New York State. But you carry over everything from your federal return, which will make on the federal return it's taxable. But on New York State, everything carries forward, but it's a subtraction when you're doing the IT 201.
Right. Okay. And what about? I thought that maybe some of the interest on like federal agency bonds, for example, like the Federal Home Loan Bank, it appears that it is taxable under New York State. Is that correct?
If it's a federal obligation, it should be tax-free.
Yeah, it's the only
So
thing.
if you want to email me just go to Ask the Tax Lady at egtax.com, and I will look it up specifically.
Yeah, I was just going to make a quick note that on the 1099 INT, it doesn't show up as a U.S. Savings.
Well, how does it show up?
It shows up as regular interest income.
From who?
Well, like I said, the Federal Home Loan Bank was with.
Well, that's
was
a
the
clue then, right? The Federal
the
Home Loan.
broker.
I mean, it sounds to me like it's going to be tax-free, and if you'd like me to look it up specifically for you, I'd be happy to do it.
Okay, now what about it appears that interest on U.S. I bonds, they're taxable for New York State?
Yes. Yeah. I bonds are taxable. Well, no, I bonds are taxable federal, tax-free on the state.
Tax-free New York State.
It should be tax-free
Right.
on New York State, we're saying, right?
Because they're all federal obligations.
Yeah. Well, that makes sense to me.
Good.
Again, I'm
Again,
looking at
if you want me to do the research, I will make sure that I find out exactly if that's tax-free New York State, but I'm pretty sure it is.
Okay. And one last question, if I can, or unless do you have another caller?
I have
Go ahead.
callers
What's your
waiting.
question?
Yeah, what you need?
Okay. It has to do with accrued interest on bonds that you purchase, like between interest payment dates. I know that you can deduct that for interest, but so if you paid, say, X amount of money in 2024, but it doesn't mature till 2025, do you have to wait till 2025 to claim that deduction?
It all depends if it's constructively received. In other words, if you're able to draw off the interest on that bond right now, then it's constructively received and it'd be taxable in the year that you earn it. But if you cannot draw off the interest because it's not constructively received, it won't be income until you're able to take it out.
Okay, that's terrific. Well, thank you very much for the advice.
Thank you. Write it down, and I'll be very happy to do that. I'm Esther Golias, the tax lady from EG Tax. Let's go to Tyler in North Tonawanda. Hey, Tyler.
Hi, guys. I'll try to make it as quick as possible. In early December, I filed for Social Security, and I got a date. I was turning 70 February 1st, and I went to the Social Security office. They gave me a printout showing me I would get $864.60 a month. So on the 31st of January, I got my phone call and went through the questionnaire with her, and at the end, she said I would be getting my $767 a month. And I said, whoa, wait, no, I got a printout showing $864. She put me on hold. She came back and said, you're right. You're supposed to get $864. But she said it'll probably be delayed because we have to adjust the system. So she said, look for it sometime either in March or April. Well, a week later, I get $767 in my account. So I called back, talked to a second rep who again said she saw I was right at $864. Now, I don't know. I went back to the Social Security office where they gave me the printout, and they verbally told me it was $767, and they tried to explain it to me, and honestly, it was complicated. But they said something to the effect that when I hit my 40 credits when I was 68, and because I only had 65 credits when I was 64, and then the year I turned 65, I started getting a job to pay into it. So I got my full credits at 68, but I'm not filing till now. So somehow she said I, quote, missed out on, and I don't understand what that was. So I don't know if you can understand or figure out who's right, because that same office that gave me the printout is now saying it's $767.
I would say call Mike Hayflick at the financial guys. He's a Social Security.
He really is a Social Security claiming strategist. And really, when you're dealing with somebody in the private sector like Mike is, sometimes you get somebody who really wants to help you. I'm not saying that people in the public sector don't want to help, but Mike might be able to unscrew the scrambled eggs.
Okay. All righty.
All right. Hey, thanks for calling.
Thank you very much.
All right. You're welcome. Let's go to Kathy. Hi, Kath.
Hi, Esther. Good to talk to you. I heard you mention Social Security, and I thought, oh, let me call. Last year, when we paid taxes, I included our Social Security, and lo and behold, they sent me a check saying that I guess I don't have to report it. And I read the directions. I do my taxes myself, and I did exactly what they said. But this is what was interesting. The IRS lady says, well, some people report it and some people don't. So I'm thinking, well, how do you do that if it says to report it on your instruction manual for doing the taxes? So I'm just curious.
Well, I think really what they were saying is some people pay taxes on it and some people don't.
Right. Okay.
Because it really has to do with that computation that Christopher was talking about, that you have to put half of your Social Security inclusive with other earned income, and if that exceeds 25,000, if you're single, 32,000 filing a joint return, then the excess is half taxable. Okay, starting off.
Right.
So
yeah.
So somebody that doesn't have any taxability they wouldn't have to pay taxes on it.
Right, and so that's what my problem was, is that I told him I don't want to cash this check if I was supposed to pay taxes, because I did that, computation and saw that I had to pay. I think like you said, it was half of what it was as far as the Social Security. And so, of course, we cashed the check. They said it was okay, and we haven't had any recourse. So, I mean, if they
you got the check from who? Who did you get the check from, Kathy?
Federal government, the
okay,
IRS.
So why did you think you shouldn't cash it?
You didn't include this.
I'm sorry.
I was going to say you didn't. This was on your 23 return, right?
Correct.
So you didn't include your Social Security as any part of income.
I did.
Correct.
I did. Yes, I did include it as income, and so
then they sent you a tax refund, right?
And that was for what because I included it as taxable, and
many people, when they do the computation, they don't owe any Social Security. It's not taxable. There's no Social Security taxability. Without looking at your return, Kathy, I can't say, but I'm going to tell you something. If you did the return correctly and they sent you the refund, you don't have to worry about it. If you did it incorrectly, they still would have sent you the refund. And when they kind of look at what they got in their computer system versus what you reported, if you make a mistake, they're going to send you a bill. But in the meantime, of course, cash the check.
Right, because I had been doing it previous years, and we've never had this happen where they did this. So I'll look it over. I'll look a little bit more thorough on that end. But I was like, I guess I'll cash it if they say it's okay, and I called them. So
again, if you need help, give us a jingle. You can go to my website at egtax.com. Ask the tax lady. Happy to help you.
Okay.
We're going to take a short break right now. We'll be back on the other side. Hey, to us, you are family. I'm Esther Golias, the tax lady, with Chris Fabian. We're here talking taxes. If you want to give us a call, 8030930, 8030930, star 930 on a cell phone. It wouldn't be fun without you. And text us, 716-8030930. I guess we got a whole bunch of texts.
Yep. My 36-year-old son is permanently disabled and collecting SSI. Can I claim him as a dependent?
Okay, so as long as you're furnishing over 50% of his total support, then really the age, those age things have a lot to do with, this is how you can still claim somebody up to this age if they're a full-time student and they're your child, without having to worry about the income that they're receiving, as long as it's 50% and they're a full-time student. In this case, once they reach age 24, the only what they become is another qualified dependent, and as long as you gave over 50% to your child's support, even though they're over the age of 24 and not a full-time student, you can still claim them.
Yep. Yep.
Actually, you can claim anybody
Yep.
that lives in your house. If it's your kid living in your house, they don't have to be there for the full year. If it's anybody else, they would have to live there the full
Right.
year.
And depending on your income, if you have earned income, you may even be able to get earned income
That's
credit
exactly right.
for him because
Exactly
he's
right.
disabled.
And
So-
let's say that you're retired on a disability pension under age 65, they would count that as wages, and you'd still get an earned
Yep.
income credit. So,
Yep.
okay, what else we got?
I bought my house and have lived in it for 3 years. If I move out and rent out the upper and lower, can I begin to treat it as income property and depreciate it,
Yes.
etc.?
Yes, that's exactly what you do. The fair market value on the it's the what used for depreciation is either the lower of the fair market value or what you paid for it plus improvements. So yes, you can.
Yes. And one more before we go to Mike. Well, maybe two more. Didn't know about the graduated tax schedule. Good for us to know. And I like the new commercials. Well, thank you.
That's very nice.
Yep.
Yeah, I wanted to talk about it because I have to tell you, I sit with clients and they go, "Oh my gosh, tell me when I move into the next bracket." Oh my gosh, and I think it's 2% extra you're going to pay.
Yeah.
You know,
Yeah.
on like $40,000, it's 2% of 40. It's, you know, it's not that big of a deal. But people think the whole thing goes back, but that's not
Yep.
true.
Yep.
That's why it's called a graduated income tax.
Exactly.
Okay.
Okay. One more. How is student loan debt that was forgiven taxed, and what will happen if the government rescinded the forgiveness?
Well, if
Well-
it's forgiven, they're not going to rescind it.
Right. They won't rescind.
Right.
They won't
So it's
forgive
not-
anymore
right.
is what they're talking about.
Right. We don't know what they're going to do. I mean, let's face it, nobody knows what's going to happen in Washington anymore.
Yeah.
Everybody is really jumpy. And
Yes.
it's so it's sad to watch people be so insecure, but hopefully here it's all going to work out. I pray to God it's going to work out, right?
Right.
Okay, let's go to Mike from West Seneca. Hey, Mike.
How you doing, Esther? Haven't talked to you in a little while.
Hey,
I
Mike, my
always listen.
friend. How are you, sir?
Not too bad. Dealing with a few problems. Getting old, 74 now. Anyhow, got a question. 2 years out of the last 5 to take capital gains off a residence. Does it have to be consecutive? What if I have a place in Florida, like the snowbirds, you go down there? What if I go down and stay with my son for maybe a year and then I come back?
It's good as long as out of they don't say it has to be consecutive. It's just 2 out of 5 years. So if you went down,
Okay.
if you lived there, then you went down to Florida, stayed for 3 years, and came back for a year, then sold it, you'd be good.
Okay, thank you very much.
Thanks, Mike. Hope you have a
Bye-bye.
good time in Florida. All right.
Okay. I have a house that I purchased 35 plus years ago in the city of Buffalo. It's probably worth $275,000 now. I bought another house and moved to Alden 7 years ago. If I sell the house someday in Buffalo, I can purchase another one without paying capital gains tax on it, correct?
No.
The house is in a trust now and is being rented out to a family member.
No,
Wow, that
no,
just got
no,
thicker
no,
and thicker
no.
and darker.
Look at, if it's not your personal residence, you're not going to get any special treatment. So it's all special treatment if it's your personal residence. But if it's a non-personal residence, then you have capital gains treatment, okay? But if it becomes investment, like a rental, then you have to recapture all your depreciation, and it's a 4797 sale. So no, you're not going to get any special treatment.
Yeah, that depreciation, the renting it out just totally threw it into different.
Right.
Yep.
Righto.
Yep. So now we got, is it better for a grandparent or a parent to open a 529 plan for grandchildren? Well,
maybe the
for-
grandparent doesn't need it.
Well, here's what I understand talking to college experts, and I know there's one at the financial guys, you can double check with them, that it would be better for the grandparent because when the child goes to college, they ask for the parent's assets. A 529 counts as an asset for the parent. So the financial aid right away would be cut, because they want you to use the 529 first. So if you put it in the grandparent's name, it won't affect the child's financial aid that they get through the government. So
on that portion.
right, but I would double check with a college planner.
Planning expert. But here's the thing. Understand that a 529 contribution is an adjustment on New York State. And if you're going to do that, you're not going to get the adjustment. That's all.
Right, if you have
and
government
many
pensions
seniors
and
don't have to file,
Right.
Don't pay any New York State taxes.
Yep.
All right, so again, let's see. Anybody else here?
One more.
One more, okay.
Thank you for the info. Read the IT 229. I amended, and I'm getting $305 back.
That's
Woo.
great. I did a lot of that. The IT 229, where they were giving you a refund of your property taxes, were only good for 21, 22, and 23. So if you're somebody that didn't file your tax return during those 3 years because all you had was Social Security, but you're paying property taxes, make sure you look into doing the 229 before it dries up April the 15th.
Yep.
Okay, I want to talk about a couple other things. Other tax-free income, for instance, might be debt cancellation. People that get a debt cancellation, that's taxable sometimes.
Right. You got to go back to when you applied, when you negotiated with the credit card company, when your car was repossessed, and at that point,
It doesn't have to be a car, but
I'm just saying it's an examples. You have to go back to that point and look to see if you were insolvent, not when you got the 1099-C, but the point when you did all these transactions.
Right. So you have to basically, what were your assets at the time of the debt cancellation? What was your liability? So let's say you have assets of $20,000, but your liabilities are $80,000. You are technically bankrupt. And because of that situation, you can fill out a form, 982, or is it 983? 982, and you can exclude it from taxability.
Right.
Okay. Well, here we are. Well, on the other thing, gifts. People want to give money away, and that's great. And if you receive a gift, it's tax-free. But if you're the giver of the gift, it might mean you have to file a gift tax return. Right, Chris?
That's right. If you give over $18,000 to a person, then you have to file the return. No money will be owed.
Right.
It's just a paperwork form telling the government.
Money might be owed if you had an estate worth more than $14 million, but that isn't like most people, right?
Right. Yep. So it's just a paperwork form. It's tax-free. Just be careful where you're taking the money for the gift.
Yes.
I know we've got like 15 seconds left, but if you take it from an IRA, you're going to pay tax on it.
That's right. All right. So during the week, if you need the best tax help for the most reasonable fees, and you have Chris and me backing you up, give EG Tax a call at our corporate headquarters, 632-7886. Until next week, I'm Esther Gulius, the tax lady, with Christopher Fabian. Hey, thanks for listening.